Good morning, good afternoon, and good evening, folks. If you guys can hear me well, and if you can see my screen as well, please do give me a sound and screen check by saying yes or no. Great, Amita, thank you. Straight out of the door before anyone else. Thank you. And thank you everyone else who is also replying to my question earlier. So in today's seminar or webinar, what we'll be focusing on US non-farm payroll data. It is the most important economic reading. When is it gonna come? Why is it important? How is it going to really influence the market? These are just some of the questions that we will be answering later on in this particular webinar, along with the thorough analysis of the markets and then by looking at the major important derivatives or indices, shall we say, and where are the opportunities. So we will encompass all of that later on. Remember, every Wednesday we cover different topic in our master series. This time it is all about the US non-farm payroll data. So whether you are new to this game or if you have attended it before, the value will be there for you guys. For those who are joining for the first time, you will understand the importance of US non-farm payroll data, how it moves the market, and why is it so important. And for those of you who have already attended these particular webinars previously, you'll get to know what are the important price levels for the assets that you can trade on the back of this particular event. So let's begin by looking at the first thing first. So a bit about myself. My name is Naeem Aslam. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services as a chief analyst. Many of you may have heard my voice or may have seen me on major tier 1 televisions like CNBC and Bloomberg, where we do our regular contribution pretty much on a weekly basis. Now, here are the social media handles for AvaTrade. I highly recommend you guys to get involved. And the recording of this particular webinar will also be available on our social media platform, YouTube, where we also add our live technical and fundamental videos on a daily basis as well. Now, before we begin, it is important for me to go through this disclaimer, which is right in front of you. Again, if you have any questions in relation to that, please feel free to get in touch with your own account managers about that. Now, something that I wanted to share with you guys is called AvaTrade's unique proprietary technology, which is called AvaProtect. What is AvaProtect? AvaProtect is a revolutionary one-click risk management tool available on the AvaTrade web trader and AvaTrade Go app. With AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse that loss directly into your account. The only cost is the AvaProtect fee itself. Now, first thing first, the agenda is right in front of you, along with some of the study questions. So I need you guys to help me with some of these study questions, especially the people who have attended before. So can anyone please tell me the importance of the US NFP? In fact, what does NFP stands for? Can anyone explain? There you go, straight off the gate. The NFP stands for non-farm payroll. That is absolutely correct. This is the non-farm payroll data, the most important economic data for the US economy, which comes pretty much, and I'm saying pretty much very carefully over here, because it comes on the first Friday of every month. The importance of this data is certainly very significant because the Federal Reserve, which is the central bank in the United States, they watch this number very, very carefully. And right now, especially in the stagflation environment or in a soaring inflation situation, the Federal Reserve in America is watching the labor markets health very, very closely. Why do they want to do that? Can anyone tell me why the Federal Reserve wants to pay attention to the labor market? So get some of the answers in, guys, while I'm writing something over here for you guys. Yeah, that's right, Amutha. Anyone else? Can anyone else give me a little bit more answer to that? I have 4 answers over here already, and I've written something on the screen for you guys as well. So one of the great answers among all of them is to decide on the monetary policy, because the Federal Reserve's monetary policy is very much dependent on what is dependent on this particular factor, that is the economic activity. So the policy is dependent on economic activity. If economic activity continues to improve and it continues to show strength, then what the Fed can do over here, they can be very confident in terms of their decision. So they can be more aggressive in with respect to winding down their loose monetary policy and increasing the interest rate. And remember, this is happening when the Federal Reserve is also reducing the size of its balance sheet. So two things are happening from the Federal Reserve perspective. Number one, they're increasing the interest rate. Number two is they're reducing the size of the balance sheet. All of that equals to hawkish monetary policy. And the hawkish monetary policy is very much dependent on economic data, and the most economic data is the US NFP number. Any questions on that so far? Because this is really, really important that you guys understand that. If you have questions, this is your opportunity. There is always, I always said, no right question, there's no wrong question. There's every question is a right question. So if you have any questions, feel free to shoot them as we go along. Now, okay, let me just see one question over here, which is a higher payroll figure is generally good for the US economy. Vinu, I don't know if you are asking me that as a question or you're making a statement. If you are making that as a statement, I would agree with you that is the situation. If you are asking me as a question, okay, there you go. So it's a statement. So that is absolutely true. So Vino is saying higher payroll number, i.e., better labor market, gives the Federal Reserve more confidence in their monetary policy, in their current monetary policy. Now, what makes the US NFP reading so interesting? Now, what are the components of the NFP reading? Because there are always hints for the U.S. non-farm payroll data. Before the data is released, you can take a guess by looking at them. One of them will be coming today, and that is your ISM manufacturing data. Okay, this is gonna come at 3 p.m. UK time. I am becoming very good in using this pen, unless I am jinxing it by saying it. So there you go. Ah, okay, well, you know what I'm doing, manufacturing. So I face I think you guys got hold of what I was really trying to say. So this is the ISM manufacturing one, is that is the most important, one of the most important numbers, and this is going to come today. And if the number comes in pretty good, then we will know that okay, the economic situations are pretty good. And then which on Wednesday, with the exception of today, is called ADP number. The ADP number is the private payroll number. So if the private market is doing pretty good, we would know that the US non-farm payroll data over here is also going to do good. If this number continues to beat expectation, continues to print better expectation, then we know that the US NFP number is going to be good as well. Of course, there is no hard and fast rule. These are the generic clues that we would usually take in the market. So a really good question is coming over here. So the question is, what if the number comes in with the estimates, in line with the estimates? It can it cause large swings in the Forex market? We know that's a really good question. Hold on to that question, and then we will discuss that when we will discuss the estimates. But it's a really good question. Okay, so what makes a US NFP reading? What gives us the clues about that? These two numbers are very decent numbers to give us the overall clue if this number is going to be a really strong, meaning it is going to be better than the expectation, or if this number is going to be really worse, meaning it's going to miss the estimates by a large mile, by a big number, right? So what is the number that we really need to know? Well, the number that we all need to know in relation to the US NFP reading is going to be coming in, first of all, when it is going to be coming in on Friday. So on Friday at 13:30, which is 1:30 p.m., the number will be released. Okay, and in order to see that number, you can head to our website, or you can go to the Forex Factory website. And then what you could do is over here, you will see that the ISM number, because this is the calendar for today, because today, as you can see, is Wednesday the 1st. So what we're going to do is we're going to click on calendar here, and then after that, what we're going to do is we're going to extend this one. Okay, I have a filters over here, that's why it's not showing me anything else. So I'm going to say don't all currencies. I want you to see every single currency over here. So now it's going to show me that on Friday, today's Wednesday, on Friday we have the US NFP data coming in over here. The expectations are what? 325,000. Now, if on Friday this number comes in close enough to this particular number, we're going to be okay, because last time the number came in 428. So we are already expecting weakness in this number already anyway. As long as the number comes in around 300 to 325,000, market isn't really going to panic that much. But if the number falls below 250, then it could be a huge panic in the market. Marketplace could begin to think that, okay, you know what, the market is not really in a great condition right now, and what we're going to see is that we need more sort of we need actually help from the Federal Reserve than anything else. So the Federal Reserve should not be reducing the monetary policy. Other numbers that are also going to be hitting the terminal at the same time is the unemployment rate, which is expected to fall to 3.45% rather than 3.6%. Average hourly earnings are supposed to be improving a little bit to 0.4%. All of these numbers over here are very much are the cocktails for the Friday's US non-farm payroll reading. So you have to pay attention to these numbers very, very closely, because there is a possibility that the price may actually miss one of these numbers and the rest of the numbers would be pretty good. But the market does have a tendency to punish speculators quite rapidly. So you have to be very, very careful. So now what we have decided or what we have looked at in terms of the price action is that we know that what the US NFP reading is made of. We know the importance of the US NFP. Now, the last and the important question in relation to this one really is the instruments to trade. Now, can someone please give me an example of the instruments that they really trade? Yes, we know every Friday of the first Friday of every month it will be released 99% of the time. Amutha is giving us the answer. The instruments that you can trade are your indices such as US 500, Dow Jones Industrial Average, the Nasdaq. Venu is saying that we can trade anything pretty much which is against the dollar. So he's talking about Canadian CAD. He's talking about the euro dollar. He's talking about the sterling dollar. MB is talking about a really critical thing over here as well, that you can trade gold. So you see, we do have a really, really clever community at AvaTrade, which is really part of this webinar, because they are throwing out a number of different assets, and they are telling us that, look, these are the assets, because they have attended the webinars before. They know that what exactly moves on the back of these particular events. So they are already giving us clues that, look, guys, keep an eye on the gold price. Look, guys, keep an eye on the US 500, right? Which is also known as the S&P 500. Look, guys, keep an eye on the Dow Jones Industrial Average. Look, guys, keep an eye on the Nasdaq 100. Because all of these ones, they're going to have a very, very significant influence. And not only indices, but you can also trade. You will also see pretty decent moves in the Forex market, which again are not only limited to Forex market only. In fact, what we are likely to see, we are likely to see the results of this, the influence of this one in the crypto market as well, because Bitcoin would also react to this particular number. Now, any questions so far, guys, before we move on to the next one, which is the current state of markets and analysis, defining levels and defining strategies? If you have any questions, once again, guys, these are your opportunities. I am here for you guys to really help you guys to become a better trader. So if you do have a question, this is the opportunity that you don't want to miss. Ask me any question and I will answer them, I promise. I think the expectations are below the previous and we can predict the market, Vino is saying. Aimu is saying, what happens to Nasdaq if actual is less than forecasted? Yes, we are going to great questions first of all. So what we are going to do right now is we're going to cover them right in our analysis right now. So sorry, let me just make this one silent. Right, okay. So I'm gonna log on to AvaTrade's web trader, okay? And now we're going to look at two things. Number one is we're going to bring the Forex factory once again back up. I'm going to click on calendar over here. And can anyone remember what was the number? I know what was the number that our market is anticipating, which is 325. Now, what would happen to the euro dollar if the number comes in quite strong or if the number comes in quite weak? Now, as long as the actual number stays between 300 to 325 or even 350, we are not expecting any major movements in the euro dollar. This is your weekly chart. Now, if there is a significant movement either to the upside or either to the downside, we could really see pretty decent movements in the euro dollar pair. Now, where can we expect the euro dollar to fall or to go under those circumstances? Well, in order to see that, we have to go back in time and we have to define our levels a bit more closely. For the euro dollar, I'm looking at this particular consolidation area right over here where the price did come and it visited that lows of which were formed back in 2017. So I am very much interested to see the price action coming into this area, okay, which I don't think that it is really going to be coming in on the back of the US NFP data. So we have to kind of to scale down our time zone really. So what we're really going to see in terms, even though our major support zone is over here, but what we could do is we could draw our intermediary support zone just a little bit above our original support zone. So we're going to be targeting this area of consolidation really over here. So I'm going to mark my other line right over here. So once again, I'm going to call those numbers out for you. Is one, well, the bigger support zone is 1.04458. The long-term support zone again is 1.03546. And as for the short-term, the number is 1.059. The other one is 1.0545. So these are the support numbers that I will be very much so paying attention to in terms of that. Now, in terms of a resistance, for me, the most important resistance is where this price is really trading. So that is the wick of this particular candle. So again, the resistance under the current circumstances is very much going to be towards the highs of this particular one. So to conclude, what we're really looking at in terms of the price action is that we are looking at the resistance right over here. We're looking at our support zone number one, support zone number two right over here. So these are the two price levels that we should be paying attention to. Any questions on that so far? Right. Okay. I'm glad to know that everyone is very familiar, is very good on that. Okay. Good, Robert. Thank you. Now, let's move on to our indices because those are the ones which are quite intriguing for us to pay attention to as they tend to move quite high. So I'm really looking at US 500 index over here. Again, if the number is somewhere near 325, 325 or 300 to 350, we are okay with that number. We are not expecting any significant moves in relation to that. But if the number comes in very below the 300,000 to 250 to 200, expect big moves in the market. Same if the number comes above 400, expect the big moves in the market. Now for the S&P 500, what we are really looking at, the immediate support zone is really going to be somewhere around here. So we wanted to shift that. We want to shift this particular line a little bit over here. We wanted to shift this particular line right over here. So I'm really looking at the lows of these particular candles over here. That is the area of consolidation that I'm very much focused on right now. And after that, the area of consolidation that I am also looking at is the area of consolidation of over here. That is a support zone. So again, what are the numbers for these particular ones? I can call them out for you guys. The support zone number one, the bigger one is 3,716 to 3,767. The short term is 3,875 to 3,932. Now, these are the support zone. If the market is moving significantly to the downside, we should be looking at this particular one. Now, if the market is going to move to the upside, then the number in terms of shorting this particular market is really going to be the top of this particular candle. So we'll be very much focusing these particular areas of 4,259 to 4,315. So they just make sure that you are making a note of these particular ones, because if not, you can always go back and then see them again as well. Now let's have a look at US 30, which is known as the Dow Jones 30. Again, the concept is very same over here as well. What we are really looking at those extreme price levels. One extreme price level is there, 30,549 to 30,886. The other extreme level resistance is 35,135 to 35,421. Now we need to find levels in between them. So the immediate support zone is really going to be in around, I would say, over here. Even sometimes, if you find a little bit difficult to find that particular price level, you can always go into a 4-hour time frame and then see if you can find a better one. See, now it has given us that particular price level, the consolidation area that I was really looking for. But I would like to go over here near 31,927. I think that particular price level sits very nicely with my risk sort of a profile that I have. If the market comes over here, great. Otherwise, I will catch it on the next move. The next move is going to be over here. In terms of resistance, I wanted to catch the market on the top of these particular wicks, and I wanted to mark that boundary by over here. Now, we have covered quite a lot over here. So any questions so far? Emu, Robert, Vinu? After that, we're coming to Emo. We're coming to Nasdaq 100 as well. Okay, now quickly have a look at US Tech 100. Why is it not coming up? There you go. So what we wanted to see, once again, 325, so between 300 to 400,000, 300 to 350,000 is at least our range that we are looking at. Now let me change the time frame to begin with, going to a weekly time frame to define our price levels to start the conversation. Now we are seeing pretty decent moves in terms of the price action. This was the area of consolidation that we were very much expecting the prices to come into, but the price didn't really come to that particular area. It bounced off before that area. Now the question really is, where should we be looking at in terms of our support and in terms of our resistance area on the back of the US NFP? So I'm going to drill down into the daily time frame. And from the daily time frame, what I'm going to really look at is, okay, where is an important area of support? So when I go to daily time frame, I see that the only area which kind of makes me wonder that, okay, I should be looking to trade that area is really going to be the lows or the wicks of these particular candles. Wicks are called the low points of those particular candle or the high points of the candle. So that is my support area number one. This is my support area number two. Now, in terms of my resistance, my targets, I am really not bothered if the price, I'm gonna be a little bit greedy in this one. So I really want the price to really, sort of kick off from here and then go all the way to 13,931 to 14,286. In terms of resistance, in terms of the support, 11,855 to 11,513. Let's quickly run gold as well before we log off. So let me just bring that one down for you guys. There you go, gold. Where are we trading? We are trading at 1833, where we could be trading in terms of the price action. That is the bigger question. So again, the support zone on the intraday time basis, I'm going to give myself plenty of room, and I'm going to go into the VIX of this particular candle, and I'm going to mark the lows or the low of this one as my first support zone. So 1676 to 1710. It's a pretty phenomenal move if that will happen. It can happen. Then after that, we are looking at the consolidation area over here, 1758 to 1786, an area where I am very, very comfortable to trade. And after that, in terms of a resistance, I'm looking at the VIX of these particular candles, and I wanted to mark my resistance right over here. So my resistance 1918 to 1899, my support 1786 to 1758. That's all, guys. That's the entire time that we got for today, and I really hope that you guys kind of enjoyed our webinar. Now remember, the recording of this one will be available on our YouTube channel, so you can head back and then watch it over there. Otherwise, until then, stay safe, and we'll speak to you guys soon. Thank you for attending.